As you rightly said, we have also some corporate announcements coming in this morning, with I&M Bank reporting a 40% increase in pre-tax profit after tax to about 3.5 billion shillings, and we'll be discussing that shortly with our market watcher for the day. Before then, let's have a look at what happened in the foreign exchange market on Tuesday, whereby we saw the Kenyan shilling extending its losses to 87.5070 per dollar, and that was on Tuesday, and this was on the back of rising demand from importers who are buying the US currency, while tea export earnings were hurt by the turmoil in Egypt, which is a major tea buyer for Kenya. Now, crossing over to the Nairobi Securities Exchange, we saw the main share index falling for the first time in 4 sessions, down 0.2% to 4,840.69 points, while the all share index, on the other hand, shed 0.3% to close at 125.83 points. Alistair Gould, the head of research at Old Mutual Securities, is our market watcher for the day. Many thanks for joining us, Alistair. Now, on the back of the results that just came in this morning, we have I&M reporting a 40% increase on profit after tax. And if you look at the industry, we saw most of the banks reporting between 15 and 25. If you recall, Equity did 17. We had housing finance did quite well, which was at 60, but now you're seeing this one coming in at 40%. What are your thoughts on their performance?
I mean, it's to be expected for a bank of their size. It's still possible for them to be a bit of an outlier. They're going very aggressive on their growth plans, and I believe they have made intentions to go into other East African markets aside from where they are. So in line with this rapid expansion plan, I believe at this stages we can still see such growth as we did in, say, Equity Bank a few years ago. So I believe it's in line with expectations.
And it's a new kid that listed in June in the Nairobi Securities Exchange. It's a very illiquid stock, and we saw the price yesterday dropping 2% to about 88 shillings. How do you see the stock performing in light of the information that we have this morning on the earnings?
I believe, I mean, it's still a new stock on the market. It's still not very well distributed as far as people who may have access to the shares, and as a result, it's not very well traded yet. It will take some time for that to happen. We'll have to see a little bit of block trading for institutions to get involved if they are interested based on the valuations. But if today's results are anything to go by, I think this will catch the eye of many investors.
Now, looking at their total operating expenses, their other expenses, they rose 71%. And if you look at the numbers, they were almost everything doubled. If you look at staff costs, if you look at directors' emoluments, if you look at rental charges. For you, what are their thoughts in terms of their costs versus their income? Because also when you look at their total operating income, it only rose 15%. So you're looking at 15 versus 71 on expenses.
I would say probably, I mean, we would have to speak to management, but off the cuff, I would imagine that the two things that come top of mind is, first of all, if you're expanding, you need more staff, first of all. So you're definitely going to be out on recruitment, and that's going to cost you. Secondly, when you're in such a growth phase, you also want to retain your better workers because they are contributing very well to your top line. You don't want a big bank to just snatch them off. So you need to make it worth their while to stay with you, and probably they've had to pay a little more, hence driving up their expenses on their people as the resource.
Okay, and there's a bank that has got presence in Mauritius and Rwanda, and now they also say that they want to be in Uganda by the end of the year, and they had intimated that they're likely to have a capital raising venture. How do you think that would go, especially looking at the environment at this point? Is it the right time in the second half to actually think of a rights issue or a capital raising venture, or do they need to give it some time?
No, I think the whole point of coming to the capital markets is to be able to access capital very easily, and going for a rights issue at this point in time is really good for them, because one, it will also increase the amount of tradable stock on the market. It will allow new people to access the shares through buying the rights, and it will also offer a capital gain opportunity for investors through a discount. So I think based on their performance, once again, depending on the discount that they give, I think it will be an attractive buy.
Okay. Looking at the other banks that are yet to report, we have KCB, which is the biggest bank in terms of assets, and we have Standard Chartered Bank, and we also have NAC Bank. How do you see their performance coming in?
Well, banking sector as a whole, we're still pretty confident, pretty bullish across the board. everyone is waiting to see KCB's earnings, and if the share price is anything to go by, it has hit a very, can I say, all-time high in relative terms. Of 45.5 recently. That's a price that, well, a lot of people had capped at, as a max level, but it's been able to sustain at that point without it weakening and coming lower. So I believe that's just an echo of investors' sentiment around what they expect in terms of earnings. And it will be watched very keenly, especially equity versus KCB, because that
the two are always competing head to head.
Neck and neck, yeah, correct. So we would really want to see what have been the growth areas for KCB, and are they innovating? Are they changing anything? Are they looking into new products? And how are they doing in terms of the mortgage lending, etc. So KCB is definitely one that we're watching very closely ahead of the earnings.
Talking of growth prospects, we have Equity Bank now as an agent for stockbroking firms, and this is one of, I would imagine, it's one of the ways that they're going to raise revenues. For you, do you see that in the same light?
Well, if you compare, well, traditional brokerage revenues versus banking sector revenues, I think they may be better off in the banking sector. But I don't think they're looking at this as a profit center, really. It's more as a way of, one, reducing costs, and also offering their customers a one-stop financial shop. At this point, they can almost do everything in financial services except access to the market. So,
and given that they have 8 million customers, which is the largest in Kenya, that in itself, if they're able to also tap that and get them to get fees from that, if at all it is on the stockbroking, then would that also, some extra income is not too bad? It
would be a little extra income, but I think it's also just trying to keep their customers within the equity hat, as I would say, equity umbrella, such that when you walk into an equity bank, you can access a full range of financial services. Their wide client base is definitely going to be a plus, because it will deepen the market as far as the retail perspective. We'll have a lot more retail players on the market through equity, and then it can build in a culture of investing for our retail investors, and increase the investor knowledge ahead of the launch of new products on the exchange that would allow a lot more play from the retail investors, such as the futures and derivatives.
Let's mention a quick one on East African Borrowers, which is going to be announcing the results on the 23rd. And of course, they've already issued a profit warning that their profits will be less than 25%.
Yes.
And already we've seen some lackluster movement in the stock market on their shares. How do you see that performance, as we head towards the results? How do you see the stock price performing?
Well, the price is dipping, but we're still seeing a lot of foreign institutional buying net. So foreign institutions are still happy to pick it up despite the profit warning. We have a lightened recommendation on EABL on recent coverage, and we see a lot more downside. But for the investors, it looks like they're buying on any dip, and they're happy to still pick it up.
But why are they picking it up? Why are they buying it? What are they seeing that probably the retail investors are not seeing? Are they focusing beyond the numbers?
Yeah, and in fact, EABL is mostly institutionally traded, especially when we see the volumes that it trades, and it's the second biggest cap on the market. So
after Safaricom,
yeah, a lot of what the foreign institutions are looking into is more of a long-term thing. They see a lot of opportunity in the formal beverages sector, which is to a large extent, it's really untapped in Kenya. And if EABL is able to tap that even by another 5%, it would have a significant impact on their earnings.
So this is just a hiccup along the road?
I believe it's a long-term play for any investor that's buying it at these levels.
Okay.
Yeah.
It's always a pleasure to have you. Many thanks for joining us. That was Alistair Gold, is the head of research at Old Mutual Securities.